This is Alan Bush with the Daily Financial Forecast for Thursday, September 27th. Stock index futures trading higher today, even though the Fed yesterday raised interest rates by 25 basis points as expected. Also, the Fed clearly indicated that they will probably raise rates again in December. But even with the rate increase yesterday and another rate increase most likely in December of this year, I don't think that rates are high enough to reverse this bull market. In fact, with the indices higher today, that would suggest that is likely to be the case. So I'm continuing to look for further gains in stock indices, at least through the balance of this year. Moving over to the currencies, the dollar index advancing with Asia and Europe getting a look at the statement from the Fed yesterday. Looks like some short covering coming into the U.S. dollar after some rather substantial weakness over the last month or so. So even with the gains today, I'm inclined to believe that strength will not follow through for the dollar index. I think that the dollar will probably work lower from these higher levels later today and into next week, and the euro currency will probably work higher. Also looks like interest rate differential expectations are and have been turning against the dollar as of late. And it appears that, in my opinion, the Fed will not be very aggressive in raising rates next year, maybe only 2 times, with the consensus view now still at around 3 rate hikes from the Fed. So either way, to me, it looks like the dollar will weaken from here and the euro currency will advance. Interest rate markets, yesterday the bonds had firmed up after Fed Chair Powell indicated that, in his estimation, inflation was not likely to be a severe problem. However, the bonds are lower today. Still thinking lower longer term, even though I don't think the Fed's going to be very aggressive next year. The Fed is still likely to be on a course of tighter credit, of course, for the rest of this year, next year, and beyond. So the Fed is still on a tightening path, and that suggests the entire interest rate futures complex will work lower. So good trading, everyone. Once again, remember, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.